Hello, traders. Gary Wagner with the Silver Forecast here. Approximately 10:30 in Honolulu, Hawaii, on Friday, the 25th day of March, and this is the Daily Report. Silver this morning is trading quietly, but actually at this point trading up about 7 cents at the time of this writing, and we are trading at $37.21. $37.21. We are looking at our candlestick chart, and this is a daily chart. In terms of what we're noticing here is obviously we have had quite a week in the market, both in gold and silver. 31-year fresh high in silver, historical new record high in gold. When we look at this market, there's obviously been a little bit of profit taking. We're going to look at a couple of other charts that are quite compelling in terms of looking at where we are in the market. But the one thing that I do want to point out first is we do have these sets of dojis. This is a consolidating candle, and typically consolidating candles can come and typically do come at the bottoms and tops of the markets. In other words, reversal points. However, in a market that has a genuine rally going on with incredible strength, you will also get these dojis, so that where typically we would almost always only see them, let's say when the market's consolidating, like right here, these turning points, and right here, if you notice, you also get them when the market kind of tracks sideways. What's happening, of course, is you have, in essence, the market consolidating after making these sizable moves. It will move sideways for a while. It's a flag formation. Elliott called it a triangle. Elliott Wave called it a horizontal triangle. But you get this type of configuration where the market consolidates for a little bit, and typically once it does and reaches that apex, it then continues and moves in the direction of the trend, and then you'll have another period, of course, of consolidation. As that market consolidates, it will then, of course, break to the direction of the trend. And again, you get your consolidation, which we had here. And then, of course, we see the market break up. My point in showing you the market in this way is that just because we have these dojis doesn't mean that we're at the top of the market. But we also have some other compelling evidence that is pointing to the fact that we absolutely do have resistance. And let's go to those charts. Well, I'm getting a little ahead of myself. Before we get to the chart showing resistance, I did want to spend one more second talking about a chart that shows some support. This is our 120-minute. It is a candle in Henkin format. And what we did here, we looked at this chart, of course, yesterday. So we looked at a simple Fibonacci retracement from this area just above 3370 to this 31-year top. And we talked about the fact that 23 and 38 are really critical when you're talking about support levels. 3707, and then our 38% is, of course, a little bit lower in the 36 area. Now, what we found interesting, and it's still holding true today, is we do have this band of support. And if the market in silver can hold this band, this is pretty critical right here, then I think that we'll go and consolidate a bit. We might weaken a little bit and then go and make new highs. Now, this, of course, is our daily bar chart with our Andrews pitchfork. And what we noticed, of course, when we looked at the handle was that there were a couple of things that were quite obvious to us. Of course, this is drawn from 3 data points. Our first data point is right here, second, and third. Those are the data points that we create. So this actual trend line is created right in this area. So really, at the beginning of this entire move, as I said, right at the end of January. Now, we saw as the market traded higher, You could see that kind of found support. It went along there, but then it came and it tested these highs. We talked about this. This was back on March 7th. We talked about this. This was the premiere edition of the Silver Forecast. What we noticed was that there was absolutely some resistance there, and we talked about the fact that the market's probably going to come down and track to this channel line. Lo and behold, it did. And then we talked about the fact that we had support, and this was last week. And lo and behold, there was support. Well, traders, here's what I'm finding this week. We are kind of at that same crossroad again, in that we have a close, which to me is very important, below that pitchfork handle, not the handle, but the upper level. It's below it. And just as we saw the last time, you can see these closes right in here. But at the same time, when you look at those closes, it wasn't able to sustain a rally above this channel line. So the market comes down, it tests and finds support here, it moves back up. But once again, here we are at that channel line, and we have closes below it. So, do I think this market is headed higher? Yes. But, traders, be very cognizant, because what in fact might happen, and I think that there's actually a fairly high probability of it, is if we can't get closes, and I underline the word can't, if we start seeing a couple of closes Sunday and Monday above this observation will be invalidated. But if it cannot break through there, my sentiment is going to be this. The market will probably come down, test this area, and then on the third attempt, break into yet new highs. Now we're up at $39 per ounce and headed to 40. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday. Bye-bye.